Hello, ladies and gentlemen. Just going to send this invite link to the old Telegram real quick. Just get started here. Go ahead and share my screen. All right. So first off, we're going to talk about what we got coming up on the calendar this week. A fairly important week. So first off, we had some U.S. retail sales come in today. You can see that they actually rose, but less than expected. Again, this is in line. We've had McDonald's, we've had Costco, we've had Walmart, we've had Dollar General. They all are reporting the same thing, that the bottom end consumer in the U.S. is hurting. This is corroborated by credit defaults, mortgage defaults. So people are hurting, and this is just another evidence point to that. Now, tomorrow on Tuesday we have housing starts, which is going to be interesting to see. It's probably going to be bad. I don't think much goods going on that front. But really the most important one this week is the FOMC, the Fed's interest rate decision, and the press conference from Powell. So we'll see what they're going to do. I don't really believe that Jerome Powell and the Fed are particularly important to the markets at this moment. I think that Trump has sort of put Powell in the back seat. So it will be interesting to see what he says, because this month's PPI and CPI readings came in soft. So that means inflation didn't grow at all. I think on the either CPI or PPI side did not grow at all, and on the other one it was pretty low. So we are seeing a little bit of deflation, which is what Trump wants, which is what the administration wants, which is good for consumers. It may make the Fed a little more dovish. Maybe they're going to start talking about potentially cutting rates, but we shall see, right? It remains to be seen. And then Thursday, we have the initial jobless claims, which will be interesting with all these federal workforce layoffs happening. Those are probably going to be pretty high, higher than they have been. So it'll be interesting to see that. So that's the market calendar we have on this week. Now let's go and look at some of our setups. Go day. So basically last week, SPX and QQQ, they both breached an important level. If I hide this, I don't actually how to unhide it, but you can see that, move this line up. This is the 200 moving average, 200-day moving average. We haven't actually crossed below that since November 23. So we've been way above that since for almost a year and a half or so. But it crossed below it, and this is going to be a key about the 57.10 mark. It's going to be about a key resistance level. We're getting a little bounce on Friday. We're getting a little bit of a bounce today, though it looks like it's selling off a bit. So it's going to remain to be seen if we can breach it. But this is the support line, our resistance line. This is the resistance line. Now, if we breach this, we could probably retrace 5% or more pretty quickly of this recent correction. If we do hit this and bounce lower, really, we may have a level here at 55.20, but I'm really looking for it to go retreat down to 54.07. Again, the markets, in various administrations, there's always the Fed. There's different, people call them different puts, right? There's the Fed put or whatever, but this is the Trump put for this administration. Bessent went on the airwaves yesterday on TV talking about how the administration really doesn't care. Treasury Secretary Scott Bessent saying the administration really does not care about the markets. They're trying to reorganize the economy to be a little more less financialized and more real in terms of manufacturing, in terms of actually producing goods. But this is going to sort of cause a hangover, right? Because we have been financialized, especially since the global financial crisis. And rejigging that is going to be tough for the markets to digest, at least temporarily. And also, they want the markets to I think, collapse because we've had historic gains in this market. There's going to be a correction at some point, right? And they would rather it happen earlier in the administration than later in the administration, right? Because if it happens earlier, it can be blamed on Biden, which arguably it should be, because there was a lot of Treasury shenanigans going on and money printing going on during the Biden administration. And then once we hit that low and that bottom, we can recover. Stock market can keep on going up, and then that's good for the administration, for Trump. So anytime, and Bessent has been clear about this. He's been said this multiple times that they do not care if the markets fall. So anytime you're going long in this market right now, especially, you need to always keep that in the back of your mind, that something can happen, and something, even if you're long, right, this could just be a short bounce period before a further decline. So even if you're long, it's good to always manage our positions and figure out and, cut them, or at least trim them down if all of a sudden they go the opposite direction, which, we'll see what the markets do today. Again, we're up. We opened up pretty good, but then we've been selling off hard. So this is actually a pretty fun strategy. This is a pretty fun strategy that welcome everyone. Hey, make sure you click the like and subscribe button if you want to chat with me right now. You have to be a subscriber for 1 minute before you can make a comment. So hit the like and subscribe button. You'll get notifications too when we post new videos and stuff. So it's cool. Just another way to keep in contact with me. But look, so this is a pretty interesting thing we can do for an intraday trading strategy if you want. But so what we do is we take basically the prior day's low, prior day's highs. We create like a little price action box around it. And then we look for it either to bounce off of that prior day high and go up. And if it breaks it, we're looking for it to go down. This is the way it would work is if you're on the SPX or even SPY, you would just look. So it looks like, look, we're approaching the close of Friday. If this drops below it, you could be looking to, maybe if you're playing zero date expiration, you could play 5600 butterfly or call put on SPX. A little expensive just to play straight puts and calls on SPX, but if you want to, you could do that. But you can also do it on SPY for cheaper, which is if you're doing like an opening range breakout or retracement strategy, which is what this is. That's what I would recommend. But so we opened up strong. We're having a little bit of downturn again, but today I would say, look, the 56.39 is a key support level. We're going to see if we hit that, and the 9 EMA is still above, but we're in between. Usually, one of this opening range strategy, when the price action is between the 9 and the 20 here, the fact that it's approaching this, This is when you want to maybe start setting up your trades. I do think that 5605 to 5600 could be where we land. We could also land here at 5628 for a more less aggressive play. We see a volume shelf right here. And these volume shelves, this is the anchored volume profile in TradingView. If you ever want to add it, you just go to this patterns tab. Right? Oh, no, you don't do that. Sorry, you go to the projection tab, anchored volume profile. I like this more than volume because it shows you basically it plots the volume support at different y-axis values. Normally volume's down here, right? So but this shows there's a lot of support at 5639 in terms of volume. I don't really care about buying or selling. I just care about the volume that's there for the way I use the anchored volume profile. And you see here, so this is support. So this is like the shelves. They call these the shelves. This is a shelf. This is a volume shelf, support line, support area, support zone. And you come down here and you see this little valley right here. Well, that's a valley. It's a volume valley. And usually what happens is if the price were, so let's say the SPX or the next, 7-10 minute periods or whatever was to drop below here, it gets here, bulls and bears are fighting it out, and it does break below like the 5607 mark. Typically what happens if it approaches, it's going to hit that valley. That means there's not a lot of support for that price between basically 5609 and 5600. So what you'll often see in these valleys is that the price just sort of drops to another level of more volumetric support. Conversely, if it's rising into that valley, it'll pop into another level of volumetric support, but it really doesn't hang out here. You'll typically see larger candlesticks on the upside or downside in these valleys. So let's look at yields. Yields are coming down, which is good. I'll go over here. Yields are coming down. This is on the daily. 4.2%. This is really this is why Trump wants the markets to sort of sell off, because markets sell off, bonds go, yields go down, right? Because there's more demand for bonds. It's the opposite of the way stocks work. More demand for stocks causes the stock to go up. Less demand causes it to go down. Bonds are the opposite. More demand means that the government can offer lower interest rates. And then look, so the 10-year is really, really important for mortgages, for auto loans. It's going to free up the economy if we can get it low. Really under 4% would be awesome. The lower, the better. I think, Trump really wants to get it down to 2%. That's going to really stimulate the economy. Of course, could also lead to a little more inflation, but with the recent deflationary PPI and CPI readings, plus when the markets do slow, you have a little of deflation as a knock-on effect to that. And then also liquidity for bonds or in the banks is really low right now too. So I'm just seeing if there's any. Looks like the chat is sort of broken today, so you might not be able to chat today. YouTube's I had a problem setting up the stream earlier. But bonds, so bonds go down, and it frees up the economy, right? There's more stuff, there's more things that can happen, and the markets have a knock-on effect when they fall of being deflationary. So the idea is that even though a lower yield can be inflationary, we're gonna try and balance that out with deflationary policies. Plus deregulation, which is something Trump campaigned on and seems committed to, will also increase economic activity, so you can kind of grow your way out of debt. And when there's more economic activity, you can sort of thread that needle with growth without creating too much inflation. Remains to be seen if they'll do that. It's a tightrope that they need to walk. So let's look. Got a watch list here. We just run through a few different tickers here. I actually thought about recommending Kratos last week. Wish I had. But Kratos is looking real nice. Defense stocks in general, I think, are a pretty good bet. I bet, so Kratos is a defense and defense contractor, one of the big ones. It's soaring. I bet Boeing is too. Not so much. What about Northrop Grumman? We recommended this a few newsletters back and had a pretty good gain on it. It's going pretty well. But Kratos is really a standout here. It's really soaring, and you can see there's a couple of different great confirmations with this. Obviously, the Arun crossover, which is a trend, that crossed over on last Friday, 2 Fridays ago. It's just kind of been in a nice little upswing there. So we missed that one, but that would have been a good one to trade. Plus, if you actually you get rid of this, you can come over here to the wave trader, the wave indicator, my wave indicator, which we'll be hosting a training on later today. So be sure to show up to that at 1:30 p.m. EST. That issued a call on last Tuesday. And, look, the wave trader's been rocking for a lot of people. So you would have see what happens. This is the profit target line. Would have very easily hit that in just a couple of days. So it would have been really cool. About a week trade would have, 7-day trade would have, or 6 days would have paid out nicely on that. There's a few that I like. I'm looking at Spotify. Looks like it could be about to hit. A call. Could be about to print a call. I like Spotify. I mean, it's still going to be approaching all-time highs, which isn't great. But there's no other game in the business besides Spotify in terms of streaming, in terms of music, as far as I'm concerned. That's why it's on the watch list. It's having a nice little upward movement. We'll see if a call gets printed out by the wave indicator. It could be a good entry point. And if you don't want to use the wave indicator, you can always use the 9 and the 20 EMA crossover, which is a pretty good one, along with the Arun. You can combine those. So as you can see, the 9, which is a shorter period, has not crossed over the longer period, 20 exponential moving averages. So it might be waiting for a confirmation there. Probably if it comes, will come tomorrow. So that's why it's on this watch list. Let's look at PM. Philip Morris is the tobacco company. They're approaching all-time highs again. They're doing real well, especially after that earnings report. I believe Philip Morris owns Zyn. Yep. There you go. So Zyn is, the popular tobacco-free, like nicotine pouches people put in their gums. And hey, Zyn's taking the world by storm. I don't know so it came over from Sweden. Sweden's been using this, snus, which is like a little pouch you put in your top of your lip. They've been using that since like the 1800s. Almost like a ton of people use it. It's like a majority of the population, I think, in Sweden uses snus. So Zyn is basically, usually snus is like tobacco, like actual tobacco. So Zyn, though, is just tobacco, nicotine salts combined with some other ingredients, flavorings, and whatnot. But it's become a sort of a, it was sort of a MAGA thing. A lot of pro-Trump folks started to take Tucker Carlson, even launched his own brand, a competitor to Zyn. But Zyn's very popular, and I think Philip Morris is really leading the charge on that. Plus, they paid out a pretty nice dividend, I think. So, especially if the markets do continue to sell off here, I think that Zyn, Philip Morris is, it's going to be stronger out of the other tickers, right? Because it's sort of a defensive stock. Let's look at the Summit. This was a wave indicator trade. that sent out. We actually had a good, I think it was a put on Summit, and then it's rebounding now. So we have a call signal. It was printed out on Friday. Pretty strong move anticipated by the wave indicator. It could be good. I would maybe see if it reverses towards the end of the day. We close with a green candle just to get a little bit of confirmation on that. And then a profit target, of course, of 23.95 or so. Shell. Let's see what's happening with Shell. So Shell has had a, well, I think it's safe to say, huge sell-off. I mean, it's been down for a very, very long time, and it's rebounding. Gapped up hard today. There's probably going to be some selling to fill that gap, but I do think that if Trump is serious about energy costs, Shell, oil companies are weird because if oil goes down, they kind of lose profits. But, if you're looking for like a macro thesis, I'm not hating Shell for this one. They're, expertly positioned. I do believe that, Guyana, Jonestown, Guyana, the place in South America, a tiny little country, discovered a ton of oil off of their coast. And I'm pretty sure that Shell is not going to get the contracts to drill that oil, is at least one of the top in contention. Maybe with Exxon, but Guyana just discovered a tremendous amount of oil, and basically as much as Saudi Arabia. Really, it's this tiny country in the South American Caribbean. Tiny country, very poor, but it could become basically a petro state, just like Saudi Arabia. I mean, with just paying citizens out of their oil profits. It's a ton of oil, and Venezuela's actually been threatening to invade them because it's right next to Venezuela. Venezuela says they have oil rights to these oil reserves. I don't think they're going to do it, but it just shows you that this stuff is real. And they're in the process of unlocking these and starting the initial drilling projects. I think Shell is a contender in there. So if that happens, it will be good for Shell if they get those contracts. We'll see. But from a purely technical perspective, you can kind of, Arun is up, trend, pretty strong trend here. This is a UCC, even in the time we've been talking about it, it's the green candle's contracted a bit. So I would wait just to see what happens with that. Like I said, I think the gap will get filled, but I do think overall Shell is could be a solid short-term trade. I wondered, I like Devon Energy as well. I've traded this a few times. I wonder if it's similarly experiencing a run. Devon's another oil explorer, but they're focused in the Permian Basin of Texas. Nothing yet after that put that would have paid out handsomely, but we will see if that reverses. Let's look at some of the big. Well, first off, I guess let's look at gold. Let's just see. Actually, can I just look at gold price? Under 3,000. So, I mean, gold's just been going up. It's pretty interesting. The U.S. has been there's been a ton of activity happening in the gold markets. Basically, Britain's being drained of gold. It's all coming to Wall Street, to the U.S., and people are trying to figure out exactly what is happening because there's these huge inflows of gold into the U.S. I saw some more conspiratorial-minded accounts saying that there's financial accounts saying we might be trying to reprice our debt into gold. I suppose I don't really know the details, but they were saying that supposedly all the gold that the U.S. owns is still priced at like $42, whatever it was when we initially created our gold reserves, like Bretton Woods era, or rather got off of the gold reserves. And then the idea would be if we accumulate all this gold and then reprice it to $3,000, that could re-solidify our currency peg to the gold standard and help us with debt. I don't know. We'll see. That seems far-fetched, but gold is rising, and I think that's just a sign of the economic uncertainty. Again, the economic readings, we've had some decent ones, like the CPI and the PPI have been decent over the past, 2 readings, past month. But, the economy seems like it is hurting, especially on the lower end. It's like the top 20% spend like 80% of the money. The rest are just kind of flailing, putting it on credit cards, having really hard problems meeting their financial obligations. So personally, I do think that we head to a recession in the next couple months here, plus a market correction. So in that case, gold is just probably going to rise more. Now let's talk about virtual gold. Bitcoin. What is Bitcoin doing? Bitcoin, well, it briefly dipped under 80, but it's holding at 80. It's been a huge sell-off. I think a lot of people thought that Bitcoin would just get to 200K after the Trump inauguration. But again, crypto is super, super volatile. Go ahead and get rid of the wave trader. It's not super important for this. It's super, super volatile. Who knows what it'll do? We had a huge run. A big part of the Bitcoin's performance is based around liquidity. I mentioned this earlier, but banks don't really have a lot of liquidity right now, which is deflationary, which is sort of good, but it also means that the economy is slowing down. But what's really important, especially for Bitcoin, is you can kind of see this here. So the Japanese yen is, the yen to the USD. I check this every day. It can I think it has a semi-predictive power for seeing what the equity markets will do, because basically the Japanese yen, the Japan Central Bank did this thing called yield curve control since I think 2001, where basically they were trying to stimulate their economy by keeping yields lower. So their interest rates were super, super low into the negative territory. So what people would do is called the yen carry trade. They would buy, Japanese bonds, right? And they would use that to flip that into higher yielding assets like USD bonds, and then or US equities. So, however, the central bank of Japan has proved they don't want to do that anymore. They can't, due to various fiscal reasons. So what they're doing is they're letting sort of the yields just rise naturally. Well, when those yields rise naturally, everyone has to sort of exit basically it's like a margin call. They have to exit their dollar denominated assets in order to fund the borrowing that they did for the Japanese bond. So that can pull liquidity out of the system. And so Bitcoin, I think, is a big. You can see the Japanese yields have risen significantly in the past since January. We had a little. I don't know if you guys remember, but we had a nice little scary moment in about July, and it was right here, right? So starting about the second week of July, the markets had, I think, 10% sell off or so. And you can see here that the Japanese yen was just rising and rising and rising. That was partially one of the causes of that short-term little correction there. So this is important, and it's rising now. I think it's going to continue to rise. So when this happens, on the daily, I always look at this before market open just to kind of get an idea for, okay, well, where, what's going to happen if the yen is falling today like it is. That's what sort of makes me think that today is actually going to be a green day, because there's going to be a little more liquidity in the system to do that. Another important thing to look at. Let's look at VIX, not the tradable one. So look, another structural thing. So you have yen falling, you have VX, the volatility falling. So you're having some, a nice early sell-off, which is probably going to come with a nice bounce. So for those three factors, that's why I think today is going to be green, and it has been so far. I think it still is. Let's check. Yep, it's still. So look at that. We bounced off the. So now with this opening range breakout box strategy, probably be looking to go a little long, maybe to 56.80 here. But so when the Japanese yen's falling, is bullish. When we have a nice orderly sell off like we've had here, you're going to have plus Friday was a nice big recovery. I think you're going to have some recoveries in that sell off period. It's not all just going to be red all the way down. Plus volatility is falling. So what you have is a structural setup where volatility is bearish, right? So normally, right, it's a bearish instrument. When it's falling, you have a good setup, some green candlesticks, and it's falling, and the yen's falling. It's fairly bullish market conditions, at least for today. Again, check this every day. But I wouldn't be surprised if this lasts into the week. Again, that FOMC call will be important. So yeah, and then the newsletter is coming out. There's one thing we were talking about in the newsletter. Qubits, Thai beta stock. If we do see a so high beta basically just means if the market rises, this rises faster. High beta stocks rise faster than like S&P. So we do see a nice little surge this week. I do like qubits. If those $11 calls can be had under $2, I do like that. Again, this is a quantum computing stock. It's kind of a meme stock, but I like the setup. The 9 is crossed over the 20. We have a pretty solid trend here establishing with the Arun. So I like that one. But yeah, so there's a couple more picks coming on the newsletter, which will be out shortly. So be sure to read that. And yeah, thank you for showing up. This is we're doing this every Monday. We're gonna have another one pre-market on Thursday. So be sure to show up to that. I will also drop a link for that in the Telegram. But thank you so much, everyone, and I will see y'all next time.